Bitcoin crashes towards $30,000. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to talk about the drastic, crash that is occurring in Bitcoin at this moment. And I'd like to go through an article from news.com that's discussing that. But before we do, let's just have a look at the crypto markets. And I will bring it up here. I've got good old Coinbase here. There we go. And we can see, there's a lot of red on this chart, everyone. Bitcoin is at 31,708. 721 USD. Remember when that would have been an insane amount of crypto or value for Bitcoin back in the day? You've got to, just widen your horizon. But for someone who bought in at 60 grand, they're hurting. They are really hurting. You've got Ethereum at $1,900. Tether is at $1, but it's all over the place. Binance coin is at $270. Cardano is at $1.17. XRP is only at 59 cents. It's just heading down. You've got Dogecoin or Dogecoin. Look at that. So people that have bought in from the Saturday Night Live hype, they're not doing too well. 40 cents down to 16, 17 cents. Papa Musk isn't really helping everyone out, is he? Polkadot is down to $15. And we need to get rid of these bloody, what's concerning all of these Tether coins. They're a bit worrying. So let's have a look at Bitcoin. Down. Well, look at that. Look at that range, 35,000 to 31,000 in 24 hours. We'll do 1 year low high just for fun. Look at 1 year, the range. We're sitting about the middle. So it's from 8,900 to 64,000, everyone. Bitcoin is all over the place in the last year and the last month. She's not looking too good. Not looking too good at all. So if you had been buying in, the last year. So how are we looking at? If you bought at the beginning of the year, January, you'd be still up from, $9,000. Oh, no, sorry, we'll say from January. Last 6 months, pretty much. So the beginning of this year, if you had bought in at 37,000, you would have gone down, up, and now you're sitting down, everyone. So let's have a look at this article about Bitcoin crashing towards 30,000. Because, 30,000 is a nice round number. There'll be some support there, and we'll have to see if it breaks through that level. Well, how low will it go? That's anyone's guess, isn't it? So, crypto massacre. Savage move from China cripples Bitcoin and Dogecoin. Almost all cryptocurrencies have been absolutely brutalized, and investors are in a world of pain after a savage move from China. Well, here's the thing, you're not really diversifying if you're going into a multitude of different cryptocurrencies. We'll have a look at the charts again, and you can just see the correlation between all of the different cryptos. You'd be maybe a few stable coins in the green, but everything tracks to Bitcoin, guys. Everything tracks to Bitcoin because it's one of the gateway drugs into crypto. So can you really diversify moving out of Bitcoin into, an S coin or to another, or to even to Ethereum? Not really. You got to have your investments across a multitude of assets. And then the question is, people jumping into some of these meme coins. I would honestly say most of the people jumping into it, I had randoms I met from networking that I hadn't spoken to in years. Get back in touch with me. And that's not that unusual. You want to maintain business relationships, and then trying to show me on a crypto coin. So, that just shows you how the hype train is working, how FOMO is real. So China is not messing around when it comes to clamping down on cryptocurrencies, and investors around the world are starting to feel the pinch. Bitcoin and other major currencies crashed hard this weekend, and the market is still taking a hammering this morning. As of around 6:30 a.m. this morning, Bitcoin is down 9.39%, Ethereum is down 13.44%, XRP is down 11.47%. However, one of the biggest losers is the meme currency Dogecoin, which is down a whopping 28.45% in the last 24 hours. Look at the volatility in this, guys. I am a fan of some of the potential benefits of cryptocurrencies, but the volatility means it's useless as a business tool. You could never accept Dogecoin for a contract. You'd have to peg it against something of value, against the USD, because it's just too volatile. So, it's all because of China's massive crackdown on the emerging currencies, which has entered a new harsh phase in the past week. There you go, there's that sea of red. Business experts at Shelley Palmer said the crackdown was announced weeks ago, but now it has come into effect with a bunch of gigantic Chinese Bitcoin mining operations being shut down. This sudden drop in worldwide mining capability slowed transaction times from the algorithmically set 10 minutes per block to more than 12 minutes per block, signaling to the market that the crackdown was real, they said in a note. This past weekend, even more Chinese miners went offline. This is no longer lip service or political theater. China is full-on anti-crypto. Yesterday, the superpower moved in to shut down major mines, computer hubs where the coins are created, in the key southwestern province. You know what the future is. You know what the future is going to be. It's not going to be crypto. If you have any of it, it's going to be, maybe it'll be pushed to the fringe. It's going to be central bank digital currencies with complete control of the government authority. Hey, and guys, you know what'll happen? If you forget to check in with your Queensland QR app, your central bank RBA token won't work in that shop. Hey, that's one way for compliance. It'll work. Cheaper than police. Chinese mines power nearly 80% of the global trade in cryptocurrencies, despite a domestic trading ban since 2017. But in recent months, several provinces have ordered mines to close as Beijing turns a sharp eye to the industry. Authorities in the province of Sichuan ordered the closure of 26 mines last week, according to a notice widely circulated on Chinese social media and confirmed by former Bitcoin miner. Overnight, Beijing went hard again. According to the Global Times, China's central bank held talks with a number of Chinese banks and payment institutions about cryptocurrency trading speculation, asking them to screen the capital accounts of cryptocurrency exchanges and over-the-counter dealers and cut relevant payment links. In the statement, the People's Bank of China reiterated that no banks or banking institutions are allowed to provide products or services like registration, transactions, or accounts for individuals who engage in cryptocurrency trading. Wow. This has all been a nightmare for investors around the world. The price of Bitcoin sank as low as 32,000 USD. Well, it's right now, as I'm recording this, we're sitting now at, we're back up to 32,000. Nope, sorry, 31,797. The unit has taken a severe hit in recent weeks, having hit a record of 65,000 in April, partly because of Beijing's crackdown. The notice reportedly instructed power companies to stop supplying electricity to all cryptocurrency mines by Sunday. It vowed a complete cleanup and ordered local governments to carry out a dragnet-style investigation to find and shut down suspected crypto mines. Well, for an authoritarian regime, a currency that's not controlled by their central bank and their authority, it's a threat. Is anyone surprised? They're already rolling out their own central bank digital currency in China. They're more advanced than anyone else in the world. They'll key it into their social credit score. People will love it, everyone. Free money if you comply. The province represents one of the largest bases for mining in the country. A former cryptocurrency miner told AFP they had closed everything in line with the requirements in recent days. There have been working groups coming to check, making sure we shut down operations and remove the machines, he said. So maybe the good thing from this is we might see a flood of cheap graphics cards, although there wouldn't be graphics cards in a lot of these miners, but still, maybe there'll be a flood of graphics cards and chips on the market, so I shouldn't have bought my new computer when I did. Oh well, such is life. Sichuan, a mountainous region in southwest China, is home to a large number of cryptocurrency mines, which require a colossal amount of energy supplied by the province's cheap and abundant hydropower. According to a report in the state tabloid, the Global Times, the closure of mines in the province has resulted in the shutting down of more than 90% of the country's Bitcoin mining capacity. On Monday, China's central bank added that it recently summoned banks and payment institutions, including the Industrial and Commercial Bank of China, the Agricultural Bank of China, and Alipay China Internet Technology, over providing services for virtual cryptocurrency transactions and speculation. The People's Bank of China said virtual currency transaction activities disrupt the normal economic and financial order and breed risks of illegal cross-border asset transfers, adding that institutions must cut off links facilitating them. Beijing has turned the screw on cryptocurrency miners to stamp out financial risks from speculation, although environmental concerns about the gas-guzzling mines is another factor. Chinese media reported that electricity supply to all cryptocurrency mines across the province was stopped at midnight Sunday as the topic trended on social media. Well, there you go. Look at that. Look at all those miners. Look at that, everyone. How can you compete with that? My little rig I got set up right now mining my Ethereum. I mean, look, that's just insane. That is not efficient by any measures when you think about the number of transactions it can handle. Xinjiang in China is China's second most intensive mining region after Xinjiang in the country's northwest, according to Cambridge University's Bitcoin Electricity Consumption Index. All crypto mines in the sparsely populated but coal and hydropower-rich regions of Inner Mongolia and Qinghai were also ordered to shut down in recent months, with citizens encouraged to report illegal mines. That's what's going to happen. Same thing could happen here in Australia, guys. Last month, the value of Bitcoin dived after 3 Chinese financial industry bodies reasserted a ban on financial institutions from offering cryptocurrency services, warning against risky speculation by traders. China is in the midst of a wide-ranging regulatory crackdown on its fintech sector, whose biggest players, including Alibaba and Tencent, have been hit with big fines after being found guilty of monopolistic practices. So, there you go, everyone. China cracking down on Bitcoin. And as I'm recording, let's have a look at the price of Bitcoin right now. What do we have? We're sitting at 31,977. So it still hasn't broken that 30,000 mark, but I mean, there you go. What do you think? Do you think there's a future with crypto, everyone? Do you think people are going to continue to invest in it? Or, well, do you think this is the beginning of the end? Is it going to tank even more? How much can Tesla continue to buy, or MicroStrategies continue to buy of crypto? How much money are they going to borrow to throw into this, considering how much it's gone down? And I honestly, I think it's going to be central bank digital currencies. That's what's going to come in. Our politicians, our political class, our central banks, they don't want freedom for the individuals. They want order, and most people also want order and control. So what's the solution? If you're an investor in this, you need to diversify, guys. All these cryptocurrencies correlate to Bitcoin. All of them do. Even Binance had one that was, meant to be a product that would be inversely related to the price of certain cryptos, and they just, stopped anyone getting any rewards from it. Just tanked it, stopped it selling. They intervened. Don't trust it. I wouldn't go all in. I wouldn't go all in anything. But you've got to diversify. What do you think? What are your suggestions? What are you doing? Are you putting laser lights on your Twitter profile and getting your diamond hands out and buying the dip? Or, have you left the market? Or are you not even in it? I mean, I mine crypto. I don't really buy any of it. I earn it. I'll get crypto from my library and from other sources. And at the moment, I'm flipping it to buy shares, to get dividend-paying shares. So we'll have to see. So long as Ethereum is still, profitable for me, I didn't buy the equipment to mine. I bought the equipment to render. And between rendering projects, I'll sit at there mining. Why not? It'll just extra pocket money, extra shares. Anyway, thanks for watching. Please like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you enjoy the content I create here, there are a few ways you can support us. You can sign up for SelfWealth or Stake. Support us on YouTube or Patreon. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Buy a merch from HeiseSays. Use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you in the next episode. Bye for now.